In today's video, we're going to take a look at Capital Southwest Corporation, ticker symbol CSWC, which is also the newest holding in my portfolio. This is the 22nd video that's a part of my portfolio series where I'm doing an in-depth analysis on all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 22nd in this series does not mean that this is my 22nd favorite stock or my 22nd largest holding. Also keep in mind that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. Feel free to check out the previous video in this series, which was on Omega Healthcare Investors, ticker symbol OHI, which is a skilled nursing home REIT that currently offers a yield of over 8%. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 72 shares of CSWC. Their stock pays quarterly dividends, with their last being for 56 cents per share. With the number of shares that I own of this stock, I receive roughly $40.32 every quarter, or divided by 3, which is what I like to do, that comes out to roughly $13.44 a month from this stock. Capital Southwest Corporation is a business development company that specializes in credit, private equity, and venture capital investments. They typically invest in middle market companies, mezzanine, later stage, mature, and growth capital investments. They're an internally managed BDC that's focused on supporting and the acquisition of growth companies across the capital structure. Since founding, they've invested in more than 285 companies to provide acquisition or growth funding. Capital Southwest is one of the oldest business development companies still in existence, having elected to be regulated as a BDC back in the year 1988. This company has a very long history of amazing performance. It's easily been one of the best performing high-yielding stocks over the last decade. I had been waiting a while to buy into this stock because I believed CSWC's share price would fall a little more than average due to it being overvalued in late 2021. Back in July, I announced over on our Patreon that I had bought into CSWC after it seemed like the worst was over for this stock's share price. As I'll go into more detail, this stock has a lot of really attractive features, including its special dividends and long-term share price performance. This company has a backstory that's a little unusual. They were actually founded in the year 1961, but in 1988 they decided to convert themselves into a business development company. Considering BDCs have only been around since the year 1980, this makes them one of the oldest BDCs that's still in operation. But after becoming a BDC, this company didn't exactly function like a typical BDC normally does. Before the year 2015, Capital Southwest held mostly equity investments that did not pay dividends. Therefore, the stock didn't really pay many distributions before the year 2015. Over half of their portfolio was made up of only 2 companies, which were both very well-performing equity investments. In 2015, Capital Southwest decided to transform their business. At the time, the majority of their investments were in the industrial sector. So what they decided to do was actually spin off their industrial investments into a new company and keep the remaining investments in Capital Southwest. Their industrial holdings were transferred into a new company called CSW Industrials, ticker symbol CSWI. This allowed the company to pursue a more income-oriented investment strategy, meaning that they'd be able to start paying the typical amount in dividends you would normally see with a business development company. Today, 89% of their investments are in interest-bearing debt and 11% are in equity investments. One of the most impressive things about this stock is its amazing dividend payouts. Since converting to their new business structure in early 2016, the stock has never cut its regular base dividend, and they also pay a very generous amount of supplemental and special dividends. You can see the amount changes pretty often from quarter to quarter, but they've still never cut their base dividend, which is in blue on this bar chart. According to their latest investor presentation, since December of 2015, they've had a cumulative pre-tax interest income coverage of 109%. In the last 12 months, they've had a dividend coverage of 112%. Out of all the business development companies that I've come across, I'm not sure I've ever seen one that's been able to pay out so many large regular special dividends. A lot of BDCs have been able to pay out larger supplemental dividends in our high interest rate environment, but I don't think they have any comparison to Capital Southwest in terms of amount. Currently, their stock is up an impressive 27.52% this year, which might be the best out of any BDC out there right now for this year. Currently, the S&P BDC index is only up 11.29% for the year, so Capital Southwest has to be one of the top performing companies in this sector right now. Over the long term, they've been able to grow their share price by a really impressive amount, which again is very unusual for most BDCs. In terms of total performance, the stock has been able to deliver some really amazing returns to shareholders. If we look at the 10-year return for CSWC with dividends being reinvested, we can see the stock has provided an average annual return of 26.6%. A $10,000 investment in CSWC 10 years ago would leave you with over $105,000 today. These are probably the best returns out of any BDC I've ever come across over the last decade. If we look at how well they've performed since January of 2016, which is around when they switched to their new BDC structure, they're still doing really well. They've been able to deliver an average annual return of 16.93% during this time. So while we can see that Capital Southwest has a very impressive past, the most important question we need to consider is what does their future look like? Let's take a look at their investment portfolio. Currently, they have $1.3 billion invested in a wide range of different holdings, with the majority being first lien debt. An investment portfolio of $1.3 billion also makes them one of the smallest BDCs out there. They also have 9.5% in equity securities, 2.7% in second lien debt, and 4% in something called I-45 SLF, which I'll get into in a second. In terms of sectors, no category makes up more than 13% of their portfolio, which shows that they've done really well in diversifying their portfolio. According to their website, they avoid making investments in startups, oil exploration businesses, turnarounds, and publicly traded companies. They have 4% of their portfolio dedicated to something called I-45 SLF, which is a senior loan fund that consists of 95% first lien debt and 5% other types of investments. What's interesting here is that this fund was actually launched by Capital Southwest in 2015 with another BDC co-managing it alongside with them. That other BDC is Main Street Capital, ticker MAIN, which is another really well-run company in this sector and I'm also a shareholder of. According to Capital Southwest, they formed this partnership with Main Street to access their strong established senior loan origination platform, while Main Street gets to leverage their joint credit expertise in producing attractive risk-adjusted returns. It's an unusual kind of partnership they've got going on. I don't really see this kind of thing happen too often, but it is interesting. There are a couple concerns I have for this company, but the first one has been an issue for most BDCs. The most important financial metric for these kinds of companies is their net asset value, or NAV, also known as their book value on their balance sheet. This number basically represents the total value of a BDC's portfolio, and its share price typically hovers around their NAV per share. While most BDCs typically have flatlining NAVs and therefore flatlining share prices over the long term, some BDCs like CSWC and Main Street Capital have actually been able to grow their NAVs due to their success in investing in more equity securities in their portfolios. Unlike Main Street Capital, Capital Southwest's book value per share has been more flat for a number of quarters. While this doesn't mean the company is in danger, it could mean that this huge growth we've been seeing for many years could potentially slow down if they're not able to grow this number. But they've actually been holding up much better than a number of other BDCs that I've come across, so I'm not exactly too concerned about this. A second issue is that CSWC is currently overvalued by normal BDC metrics. However, this is usually the case for this company, just like it is for Main Street Capital. Given the historical performance of CSWC and Main Street Capital, the market has just been willing to pay a premium price for their stocks. So these holdings are almost never trading at a discount except for when events like the COVID plunge happened. So if you're looking for an undervalued stock to invest in, CSWC isn't going to be one of them. But again, given the great returns of this stock, it's my opinion that sometimes paying a bit of a premium is understandable, but everyone's free to their own opinion on this issue. In summary, Capital Southwest is a BDC that's had a long history of great performance for this kind of company. As of today, they still have great dividend coverage, and they continue to offer huge amounts of extra dividends. Hopefully they'll be able to keep up their long-term trend of being able to grow their business into the future. But with that being said, that's going to conclude today's video on Capital Southwest Corporation. If you're interested, feel free to check out my Patreon, where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.